Okay, this is the market update for Southeast Michigan for November. And still are some really good leading indicators, economic indicators, that say the housing is still moving along strong, and we've seen that all year. Unemployment is going down, employment is up, interest rates are low, the overall economic growth is strong, GDP looks like it's strong and stable. Not killer crazy economic conditions, but still a good basis for real estate. One of the things that we looked at as well was the number of people who say that they're going to move. And right now, the latest survey that we saw, 23% of homeowners were looking to possibly move. Now, typically in a given year, it's 7 to 12% of people move. So that gap of about 10% or so is really that pent-up demand that we think is still out there. And now that pent-up demand is translated mainly in people who would like to sell and then buy another house. They've been held back because equities haven't quite gone back. So we think that that's a nice sort of savings account sitting in the marketplace for when the market, for the next 12 to 18 months, that even if the market settles a little bit, as values continue to rise, and in most price ranges they're continuing to rise, that will release some inventory in the marketplace. Now, if you go price point by price point for Southeast Michigan in the under 150,000 category, inventories still are shrinking there. It's still very tight inventory. Sales are up a little bit finally. They were down early the first 7 months of the year. The last 90 days they've gone up a little bit, but most of that shrinkage is the fact that people just couldn't find homes to buy. But in that price range, sellers are happy, buyers are frustrated. There just isn't a lot to buy, values are rising. In the 150 to 250 range, that mid-market range, sales are up as well, although they're declining a little bit from prior activity. Inventories are rising as well. So that that market range is not quite as hot as the under 150, but it's still settling into a pretty, still in that seller's market range, the advantage to the seller. In the $250,000 to $500,000 range, that's really kind of that prime move-up market. And inventories have been rising faster than sales there, and that's a bit of a concern because if that happens, then values tend to settle back, and for a seller that means the market feels a lot slower. But since at least half of those in the price range are also buyers when they sell, we think that's temporary, and as those sellers sell their home and then of course buy another, that's sort of an offset. So we'll see that it's sort of a strange market shift there. We'll see sales continue to rise and inventories continue to rise at the same time. In the $250,000 to $500,000 range, or I'm sorry, the $500,000 to $1 million range, in that price range, you'll see as values rise that, or as the purchase home value rises, you'll see that inventories are also rising even faster than sales. And we were surprised in the $500,000 to $1 million range that values, the home sales, have continued to rise. They've slowed over the last 90 days, but they continue to go up year to date. But inventories are rising faster, therefore sellers are going to feel that market much slower. And if you go to the over $1 million range, market range, you're going to see the same thing, only more exaggerated. Values, number of home sales for the first 7 months of the year were actually up over last year. The last 90 days they've actually fallen backwards. They're less than last year. We're also getting a lot of feedback that values in many markets are actually declining in the million-plus range, and even the $500,000+ range. And that makes sense. If sales have fallen back and yet inventories are rising, fewer buyers, more inventory, you're going to see a settling of values. That's probably, as we've said in prior months, that's probably not a long-term trend of a bubble bursting. That just is sort of supply and demand, temporary. But that temporary probably is going to go into this winter and probably into spring as well. So what does that all mean? It means that we're in a market shift. It's not a bad thing. It's just, and when a market shifts, it gives confusing signals. In this case, inventory is rising as sales are rising. So there are more buyers buying houses, but there are even more homes for sale in many price ranges. So the market starts to feel slower, and when a market changes direction, like anything else, it slows down before it makes the turn, and that's what we're seeing now. And the turn isn't dramatic, and this really isn't bad news, it's just new news. Buyers and sellers have to reset, particularly sellers in the upper price ranges have to reset their expectations. The market's not as hot, it'll take longer to sell, values may not be rising as fast, but it's still a very strong real estate market. Again, as we said in the prior months, we're always comparing to the prior months, the prior year, as opposed to the historical level. In the historical level of a 20-year average, it's a very strong real estate market as it compares to the first half of 2015, 14, last half of 13. Now it's a slowing market. Still all very good news though. Thanks.